We've had a few questions that have come in, and we do have microphones around the room so that if anybody is interested in asking a question of our three panelists, if you'll identify the folks with the microphones. But we had a couple questions that came in from the webcast participants. Here's the first one. Henry, given the state of our state budget, the system constraints, what are three things that Colorado residents should be thinking about to get behind to try to solve this problem? Because if we don't do something about it, it's going to have a dramatic impact on our economy and our businesses and our lives.
Thank you. So I think one thing about these formulas is, I think one thing people can do is come to talks like this and then multiply, the knowledge in the community about these issues. But I think one thing that's really struck me is when we look at these rules, I don't really see Democrats versus Republicans fighting in these rules. This is kind of a math-based system. It's built up over time with a lot of ideas that sounded good at one point, but then they play out in the Constitution. So I think one thing is to take a step back and understand that this is more formulas playing out than liberals versus conservatives. I think the other thing is if you know who your elected officials are at the state capitol, I think and I mean this in a positive political science way, the legislature will be as courageous as their constituents let them be. And I think we've had a lot of easy language around the budget, fraud, waste, and abuse, just make the cuts, it doesn't matter. We're not getting value for our dollar in schools. But I think that language is kind of easy when you actually go to your school and you see the class ratio, you see capital needs. I think telling your legislator that it's okay to work on these issues and it's okay to know that there's formulas, I think that would probably go a long way, because there are some things that can be done legislatively, still keep faith with the voters, but make this system a little more manageable. I don't really have a third one. I think I would just rinse and repeat on the first two.
Rinse and repeat, I like that. And I know Kelly and the Chamber are doing a lot to begin to analyze this issue and come up with some very tangible actions that we can take, because this does become a problem in this year and into the next year. Do we have a question over here? Is there a question in the back? We got another one as people are getting brave enough to raise their hands, and this one is for Patty. This is a challenge that will likely be in front of the legislature this year as well. Can you shed some light on the debate that multifamily home construction is concentrated on apartments versus condos? Deal with it relative to sort of the demand that's out there based upon the demographics we just heard versus the construction defect loss.
Sure. So in the chart that I had showed, that red bar that was looking at the multifamily construction, that does not reflect ownership versus renter at all. So in that particular data, it's just only based on the number of units that were being developed, okay? The big question is, for many of these higher density, as we have the boomers that are looking for these lower maintenance opportunities, the millennials that are trying to figure out, how do I get into that hole? How can I even start thinking about owning my own home? I need a stepping stone. That's when we start to look to the condominium, the townhouse market, so that there are ownership opportunities. Well, what we've seen in Colorado is that most of that red bar is going to be rental properties as opposed to ownership properties. And one of the things with fast tracks that we had hoped, that we had planned on, was that around these transit-oriented development stations that we would have ownership opportunities too. Our communities, renters are great, but in our communities we tend to see more community involvement and everything from those individuals that have an ownership position there. Due to the way the construction defects legislation has been written, it is very challenging to get those ownership buildings constructed right now. So there's fear from the developers of getting sued and that they won't be able to be given the opportunity to effectively minimize any type of issue. So, all this legislation is you know, it's not that we are trying to promote shoddy construction. That is not it whatsoever. We want people in the community to have that recourse. But we also need to make sure that there are arbitration measures, that in the condominiums that people have truly gotten to have a majority vote in terms of whether or not they want to pursue some type of legal action against developers or that type of thing. So anyway, the whole bottom line is what we're seeing in Colorado right now is our system is such that it is very challenging for developers to build those new condominium units. Insurance costs are outrageous. Financing costs are very challenging. So we would like to see some changes in that law to encourage more ownership, higher density opportunities out in our marketplace.
Elizabeth, could I ask you to address that as well? As you look at these demographic projections, will at some point this next generation, whatever it's called, change their habits and move away from this apartment market? How do you see demand changing based upon demographic projections?
You know, it's really hard, obviously. We reached a peak in 2010 where it was a bad time in terms of our economy. And so getting into ownership was incredibly challenging, especially for the youngest age groups, because they were the worst hit by the recession. And again, millennials are right now between the ages of 15 and 35. So they're also at that youngest age group, and most of them are still, you know, allowed to be in parents' basements. But, you know, so they're moving in, and everybody's taking longer to do everything that they've ever thought about doing, whether it's getting married, having kids. And so not really until that generation starts really getting into whether it's marriage or partnership and kids, then you start seeing the demand switch to potentially to ownership. But they've also got to have a job, and they have to have a time period that they've had a job. We see the demand for ownership increasing into the future, and I think it's vital for our economy. If they aren't involved in asset accumulation at a young age, where will they be at 45, at 55? And so I worry about that concept that people may not ever get back into ownership, but if you look at your own wealth and your client's wealth, what is the biggest part of that? And it tends to be real estate. So that is one of my biggest concerns of that group right now, is looking at where will they go and what will they get into. But definitely smaller. You know, if you are in the McMansion market, we've got enough. That is not something that I see a demand for more McMansions. But, you know, those smaller single-family homes I see demand for.
Interesting information. Anybody else have a question from the audience? I still have some from the webcast, but yes.
Yes. Okay.
There you go.
Oh, here we go. First of all, I'd like to thank the panel. I think you guys have done a wonderful job. And my question is for Henry. And I know you had to expect this question, but I really would like to know your thoughts on oil prices. I know you don't have a crystal ball, but if you can maybe elaborate a little bit on your thoughts.
So oil prices, and we love to make economist forecast jokes. I think that at a top level, there is a lot of compensating benefit to what will happen probably with a pullback in oil and gas development in Colorado. We've been talking to some executives in the industry, and to the, you know, they can't exactly say exactly what they're doing because they're constrained. But it is reasonable to expect a pullback from the trajectory that they had been on in terms of new investment, new rigs. And we're mindful of that because a dollar spent in that industry pays out a much different multiplier than in other industries. But Colorado's economy is not just an oil and gas economy. This is different than 30 years ago. Our diversification is just, it's a completely different place. And so even a substantial pullback as Patty indicated, would still mean that we would probably still gain jobs in Colorado for a year. And then you add up all the compensating benefit to households and businesses that will have money freed up from lower oil prices and gas prices. So on net, it's probably a little bit down, but just in that sector. And I think the total state economy will continue to grow. It's not to diminish the impacts on those communities or those people. Where we're really trying to spend a bunch of time is read these tea leaves of how long will this go. Even for the Saudi Arabian government, oil is 90% of their budget. And so how much do they have in the bank to try to take people out if that's actually what's going on in this big game of risk? So I think right now the projection is later in 2015 in the fall, prices go back up. And that's kind of the working theory right now.
I do think it's interesting, and I'll shout out to Kelly Bruff again from the Chamber. If anyone wants to follow up on this topic, I know they're really looking at it. She wrote an email the other day that said of the 50 states, I think, Kelly, in the U.S., there are 8 states that will be impacted negatively by the oil and gas decline in price. And Colorado is one of those 8 states just because we have such a concentration here, even though it's less. They're also doing analysis on what's the break-even point for delivering a barrel of oil, and it changes across the state and the basins all across the country. And I think Colorado is well poised there. But just to exacerbate this whole budget discussion is severance tax, which is a big part of what's helping drive our state budget and local economies, could also be impacted by this. And I know this is a priority for the Chamber and their leadership in helping us understand what does this mean for Colorado, I think is really key. So check on the Chamber, become a member if you haven't, because I think the quality of work they're doing in this space is really critical, I think, to all of us. Other questions in the back?
Good morning, Mr. Alexander. Thank you for the wonderful breakfast, and thank you, panel, for your expertise. My name is Steve Farland. I'm a business owner. We began a business in 1990 as an entrepreneurial desire to excel and try to raise a family, and it was at that point when the economy was just coming out of the 80s and you couldn't find a job, you couldn't find anywhere to live because you couldn't afford to live there. And I've watched this growth, and it feels suspiciously like the beginning of the 90s again, where there's a big wave and there's a lot of growth and a lot of business. Our business is a hospitality business. We sell and build furniture for restaurants. And I'm wondering what the growth projections are for the hospitality industry, and where does it line up in the picture of employment in this state, future and present? Thank you.
Patty, you want to take that first?
Sure. So in terms of the whole hospitality industry, so our leisure and hospitality sector in the Metro Denver region is expected to continue to grow in 2015 and a little bit beyond. I think that we're seeing improvements in terms of tourism activity in the state of Colorado, which certainly benefits our businesses that are located here in the Metro Denver region as well. So this brings up the point that our economic forecast is being released tomorrow, a full report that goes into the description of all of the different industry groups. And I have to say, I can't remember exactly what the growth rate is that I have slated for that leisure and hospitality industry, but I do know that it is expanding. I think as we look forward too, again, the whole idea that the different generational shifts that we're experiencing are indeed shifting to those spending patterns. So as Elizabeth had mentioned, the boomers are spending more of their dollars on restaurants and travel and that type of thing, versus perhaps some of the younger generational groups are not quite as are still being very frugal in terms of their spending. So I would think that a lot of the attraction in that industry is going to generally be coming from the business travelers as well as the older generational groups.
Elizabeth, you want to add anything to that?
Yeah, That's what I was going to mention, is that just keep an eye on the demographics. So we definitely see that growth in the 65 plus. So looking at leisure hospitality targeted at that age group. Not so much at the 45 to 64-year-olds, because that's not where we're seeing a lot of the growth in the future, but then also at the lower end, so a younger end. So looking at leisure hospitality targeted at the younger end, and as Patty mentioned, that's going to be a different type, and then looking at that 65 plus. And remember that that 65 plus is different than any other 65 plus we've had, because they're boomers. They've been very, very active. They're the ones that, you know, created that adventure tourism, and now they're going to be looking at that low impact adventure tourism. So there's a huge market out there, and I think it's just really important to know what your segment is.
Low impact, I like that. You know, we have regular forums with our customers across the state and ask them what's on their mind, and a lot of them are coming to this point of saying, we need to reinvent ourselves, as I said earlier, but we need to continue to segment and sub-segment our target customers as well as employees in order to be effective going forward. I have another question that came in from the webcast for Henry. So they're a little confused about the budget. So the question is, as you see this required increase in K-12, as you see the impact of demographics requiring more investment in Medicaid, perhaps a reduction in severance tax and other resources, and now, because of the cap, we have to give money back to the taxpayer. So far, that seems like strike three to me, but can you expound on what the impact that has on the state construction budget? And if you look at a project like I-70 corridor just over here, does that mean we won't have the money to fund these kinds of things? What happens?
That's a great question. So from our pie slice, capital construction is something the state does, either through building state buildings, maintaining state buildings, or in certain cases, there is a statute that allows general fund money to go to transportation. Most of transportation is user fee, the registration fees you pay, the gas tax you pay, federal funds that come back to the state. So the impact on the budget is on the margin. So yes, the transportation budget will remain kind of where it is. We're not allowed to use the taxes and fees in transportation for the Tabor rebate. Remember, they're in the orange. The Constitution actually protects that slice. It's the extra money that won't be able to be given to transportation that pays for these big one-off projects like the viaduct. And so is the answer no, it will never happen? That's not a good prediction. The point is that these constraints are now going to probably crowd out things like that unless something changes, because no one expects public safety to be compromised to balance the budget. We will, have to comply with when new Medicaid people show up. Similarly, we're trying very hard to keep that negative factor from growing. So I would say that it's less a calamity absent a recession. Rather, this extra on the margin with resources that we currently have. Now, I will say, this dynamic that we're playing out, we're going to have more money going to K-12 than is available for the whole budget. That's in a growth scenario. So if a flat budget, a stock market hiccup, even a downturn, and the growth formula and the biggest pie slice continues, that's where you start to see things getting Pac-Man'd away.
Got to pay attention to our economy and our state budget. We have time for one more question from the audience. Anybody else have one last question? Okay, our speakers will stay up here afterwards. If anybody wasn't brave enough to ask a question, I'm sure they'd be delighted to chat with you about it. Would you please help me thank our great speakers today, Elizabeth, Patty, and Henry. I think they did a great job. And for anybody who discounts the level of impact and intellect of government officials, I think these guys prove that they make a huge contribution to our state. Vectra wants to thank you for being here today. Those of you who are customers, we truly appreciate your business. Those of you who are not yet customers, we look forward to changing that. Have a wonderful 2015. Please let us know what else we can do to improve this event in the future. Thank you very much.